it feel like a structural expansion here is behind the growth in revenue in certain of your segments? Or is it more of a cyclical uptick, would you say, Bob?
Ivani, good morning. First, I'd say it's a little bit of both, but most importantly, what we've been experiencing for the last several quarters, and we expect for the rest of this year, is this unrelenting demand for compute performance, primarily driven by the incremental needs for data, and that data to be stored, analyzed, and retrieved. And that fundamental trend is what we've been investing towards, and we're reaping the benefits of that with the strong performance in the first quarter. At the same time, I would say for the full year, we do see CIOs, probably because of a strong GDP and strong earnings, seem to have more money to spend, and they're refreshing their environments, and we benefit from that as well.
Well, so speaking of which, you know, AMD is a stronger competitor than it was now to you guys. Its Epic product is also, you know, catching eyeballs, if you like. How do you stave AMD's competition off? You know, at one point it had 25% of the market. It's down to, you know, low single digits now. But how do you stave AMD off?
Yeah, the key for us is the same. It's to deliver great high-performance products for our customers year in and year out, and that's what we're focused on. And as long as we do that, we think it's going to bode well for our business. And you saw in the quarter our data center business was up 24% with strong performance in cloud, continued wonderful traction in our comms and networking business, and enterprise was growing as well. So we think we have the right set of products, the right performance. It's really driving demand at a unique time in the industry. As long as we do that, everything else will take care of itself.
Speaking of NVIDIA, they now, you know, sell graphics for data centers. You also have a graphics business. I'm wondering what your plans for that business are, given that Google is now also in on the action.
You know, we have a very strong position with integrated graphics. It's been a core part of our product portfolio for a long time. But more recently, we've announced our intentions to begin to leverage that strength in integrated graphics to build more discrete graphics to solve some of the emerging opportunities and problems with our customer base. So great integrated graphics position, trying to leverage that and extend that into new markets.
Bob, can you tell us about the PC market, the context for 2018? Have we bottomed? It seems we have. Is it stable, though?
You know, it's a great question. I think what we've experienced really during the second half of last year and in the first quarter this year is a stabilization. As you know, the PC TAM has been declining for a while, but those declines have somewhat stabilized for the last couple quarters. And our sense in the first quarter, the market was relatively flat, which for us is good news. Our volumes were flat, so we think from a share perspective, we're doing just fine. But more importantly than that, the mix of our products continue to be upsell for higher performance products. So as a result, in a relatively flat market, our revenues grew 3% in the quarter. So far, so good. And part of our full year guidance increase was a function of both strength in the data-centric businesses, but also the stabilization in PCs as well.
When it comes to non-PC, Bob, within the chip space, what excites you most? Which area provides the best opportunity? Sort of non-auto, non-data center chips, you know, IoT, cellular, data center, adjacent USA, auto chips. Can you sort of list it in order of preference?
Yeah, well, first, as we've talked about before, over the course of the last couple of years, we have dramatically expanded our served market. Where we used to focus primarily on CPUs, we now focus on the increased demands for data and where silicon can be a differentiator. So our product portfolio today includes CPUs and FPGAs and artificial intelligence for the data center, for PCs, for autonomous vehicles. So we've dramatically expanded the market that we serve because the continued demands for compute performance play to our strengths. So we see all those as opportunities, and that's the market that we see we've been going after, and that's what's really accelerating the growth for the company.
Bob, talk to us about margins for the company. What would you say the normalized margin level is? What are you looking to attain?
Well, for the first quarter, our operating margins expanded by 300 basis points. So we had strong top-line growth, 300 basis point margin expansion, and the combination of those and a lower tax rate yielded 32% EPS growth. So margins is a big component of our equation. What our focus is on continuing to invest in this much broader market that I just referred to Mark, but also to leverage strong growth so our margin structure stays in line with where it's been or modest improvements over time. But margins are really going to be a function of the opportunities that we see to invest behind them. So far, we've been able to invest behind big opportunities and expand our operating margins. Our expectations for this year is we'll improve our operating margins by a full point while we continue to invest in growth.